whenever we have conflicts, there's I guess, a desire for people to look at that conflict and think, will it be short-lived? If we look at what has happened in Ukraine, tragically, it is continuing, and it looks as though it will continue for the time being. But if we look at it from a market's perspective, then I guess the sanctions which were imposed upon Russia straight after the invasion will remain in place. That also is going to mean that commodity prices are likely to remain elevated, in particular oil prices and natural gas prices. And as we hit the winter, particularly in Europe, there will be concerns about supply of natural gas to Europe and the ability to maintain levels of industrial output and consequently on profitability for some of those companies that are producing within Europe. So the impact looks as though it's going to be ongoing for a period of time. In terms of inflation, we've obviously seen inflation rise to levels we weren't expecting at the beginning of the year, driven partly by commodity prices, including oil prices, and the signs appear as though that's going to continue as we go through the second half of this year. However, we have to recognise that the rate of increase in oil prices, the rate of increase in petrol prices that we've seen in the first half of this year is unlikely to persist as we go into 23. So even if prices remain elevated, the rate of increase is going to be less than it has been at the beginning of this year. So as we go through the back end of this year, as we go into 2023, we're likely to see inflation start to fall as we go through this period. What has the reaction of central banks been? Well, it's been to raise interest rates and to dampen demand. That will have an impact as we go through the second half. And so consequently, there will be this dual impact. One of commodity prices not rising by as much as they were at the beginning of this year. And then also the impact from interest rates, which have risen, dampening demand. And so consequently, we would expect to see inflation come down as we approach the end of this year and into 23. I think if we look at the supply chain, which has really been challenged over the past couple of years, starting with the pandemic when it was very difficult to source particular goods in particular areas because people weren't working, there was lockdown, there was shutdown, that has impacted the supply chain. And you've got to remember with the supply chain, you're only as strong as your weakest link, and there have been weak links around the world over the past couple of years. And then we go into this year and we see Russia's invasion of Ukraine, and again, further challenges to that supply chain. We look at China this year as well, and we look at some of the local lockdowns within China, again impacting that supply chain. So consequently, the challenges for the supply chain remain there, but over a period of time, as we emerge from the pandemic, those pressures are likely to lessen as we move forward. And that should help lessen the inflationary impact from the supply chain challenges. So yes, we expect to see some improvement, but it's time that's going to solve it. It doesn't happen overnight. As we enter 2022, we are looking at recovery out of the pandemic. But as we've gone through 2022 and we've seen expectations of interest rates rise, we've seen uncertainty as a result of Russia's invasion of the Ukraine, the fear has moved. Well, inflation is still a fear, but it's also aligned with a slowdown in economies. And that slowdown in economies potentially is going to result in recession. If we look at the US, we saw negative growth at the beginning of this year in the first quarter. Quite possibly, the second quarter is going to flirt with negative growth as well, which would be the definition of a recession, 2 negative quarters in a row. So yes, flirting with recession, but do we expect it to be a deep recession? That's what we think is really important. We think that the slowdown will bring about recession, be that in Europe, potentially in the US as well, but we don't believe it's going to be deep recession like we saw in the global financial crisis of 2008-9.